Real estate, it's the dream, right? Owning a piece of land, a house, or even a whole apartment building. It feels solid, tangible, and it can be incredibly profitable. But here's the thing. For a long time, it felt impossible for most people. You needed tons of cash, excellent credit, and nerves of steel. That's because traditionally, getting started with real estate meant buying a whole property. But guess what? The times, they are a-changin'. You don't need to be a millionaire to get started in real estate. In fact, you can dip your toes in the water with as little as $500. Investing in real estate is like planting a tree. The best time to plant a tree was 20 years ago. The second best time is now. So, are you ready to dig in? This guide is your roadmap to growing your own real estate empire, one $500 investment at a time. Let's face it, the old way of investing in real estate was like trying to climb Mount Everest in flip-flops. Difficult, risky, and probably not going to end well. But technology and innovation have changed the game. We're talking about things like REITs and fractional ownership, which allow you to invest in real estate without the traditional headaches. Think of it like this. Buying a whole property is like buying a whole pizza. It's great if you can afford it and you're hungry enough to eat it all. But what if you only have a few bucks and want a taste of different toppings? That's where REITs and fractional ownership come in. They're like slices of pizza. You get a taste of the real estate market without breaking the bank. With REITs, you're essentially buying shares in a company that owns and manages real estate. It's like investing in a basket of properties, diversifying your risk. And the best part? You can usually start with a small amount of money, even less than $500. This is where your journey begins. A journey that can lead to financial freedom, passive income, and a legacy you can be proud of. Over the next few sections, we'll unpack the world of real estate investing and show you exactly how to get started with just $500. We'll cover everything from REITs to fractional ownership to house hacking, breaking down complex concepts into bite-sized pieces that anyone can understand. The best part? You don't need any prior experience, a fancy degree, or a trust fund to get started. So, are you ready to take the first step towards building your real estate portfolio? Let's dive in. All right, let's talk REITs. Don't let the fancy acronym scare you. REIT stands for Real Estate Investment Trust. Think of it like a giant basket of real estate goodies. Instead of buying a whole property, you're buying a tiny piece of many properties. It's like having your real estate cake and eating it too, but without the massive upfront costs. Imagine owning a sliver of a shopping mall, an office building, or even a luxurious hotel, all from the comfort of your couch. That's the power of REITs. They allow you to tap into the lucrative world of commercial real estate without needing a Scrooge McDuck vault of cash. Section 2, REITs 101. Understanding the basics. Now, how do REITs actually work? It's pretty simple. REIT companies own and operate income-producing real estate. Think apartment buildings, shopping centers, office spaces, places where people pay rent or businesses generate revenue. These companies then distribute a big chunk of their rental income to shareholders like you in the form of dividends. Remember, REITs are legally required to pay out the majority of their taxable income as dividends. That's why they're so popular among income-seeking investors. But wait, there's more. REITs are traded on stock exchanges just like regular stocks. This means you can buy and sell them easily through a brokerage account. Section 3. Diving deeper types of REITs and their perks. Ready to dive a little deeper into the world of REITs? Great, because there's a whole buffet of REIT options out there, each specializing in different types of properties. You've got your retail REITs, which invest in shopping malls and retail spaces. Then there are residential REITs focusing on apartment buildings and other residential properties. Don't forget about office REITs, healthcare REITs, industrial REITs, and even more specialized ones like data center REITs. This diversity is fantastic because it allows you to pick and choose the types of properties you believe in and understand. Each REIT sector comes with its own set of advantages and risks. For example, residential REITs tend to perform well during economic downturns, as people still need a roof over their heads. The key is to do your research and understand the dynamics of each sector before investing. Section 4. picking your right, getting started with $500. So you're convinced that REITs are the bee's knees, and you're ready to start investing with your $500. Fantastic. But with so many REITs out there, how do you choose the right ones for you? Don't worry, it's not as daunting as it seems. The first step is to figure out your investment goals and risk tolerance. Are you looking for steady income, long-term growth, or a bit of both? Once you know what you want to achieve, you can start narrowing down your options. Next, it's time to do your homework. Look for well-established REITs with a solid track record of dividend payments and asset management. Check out their portfolio of properties, their management team, and their overall financial health. Remember, investing in REITs is a marathon, not a sprint. Remember that feeling when you were a kid and wanted the whole darn candy bar but your mom said you could only have a piece? Fractional ownership in real estate is kind of like that. But instead of a sugar rush, you get a piece of a potentially lucrative investment. In a nutshell, fractional ownership allows you to own a slice of a property. Think a swanky condo in Miami, a charming beach house in Malibu, or even a slice of a commercial building. You pool your money with other investors, purchase the property together, and share in the rental income and potential appreciation. Now you might be thinking, isn't that what REITs are for? Well, yes and no. While both involve shared ownership, fractional ownership gives you a direct stake in a specific property. So, how does this whole fractional ownership thing actually work? Imagine you and a group of friends want to buy a vacation home but don't want to shoulder the entire burden. You could each chip in for a share of the property, say 25% each, and become co-owners. That's essentially what happens with fractional ownership, but on a larger scale and with a lot more structure. Companies specializing in fractional ownership purchase high-value properties, divide them into shares, and then sell those shares to individual investors. These companies handle all the nitty-gritty details from property management to tenant screening, so you can sit back and watch your investment grow, hopefully. Plus, many platforms offer built-in rental management services, making it even more passive for investors. Fractional ownership offers a slew of benefits, especially for those with limited capital. Firstly, it lowers the barrier to entry for real estate investing. Instead of needing hundreds of thousands of dollars for a down payment, you can get started with a fraction of the cost. Remember that $500 we talked about? That could be your ticket to owning a piece of paradise. Secondly, fractional ownership allows you to diversify your portfolio across multiple properties. Don't put all your eggs in one basket, right? With fractional ownership, you can spread your risk and potentially increase your earning potential. Plus, you get to enjoy the psychological satisfaction of owning a tangible asset, a piece of the American dream, so to speak. Section 4. Choosing a platform and getting started. Your digital gateway to shared ownership. Ready to jump into the world of fractional ownership? Fantastic! The first step is to choose a platform that aligns with your investment goals and risk tolerance. Some popular options include Fundrise, Cadre, and Equity Multiple, each offering unique features and investment opportunities. When choosing a platform, consider factors like minimum investment amounts, fees, property types, and historical performance. Do your research, read reviews, and compare different options before making a decision. Once you've chosen a platform, you'll need to create an account, verify your identity, and link your bank account. Section 1. House hacking live rent-free and build wealth. Now let's talk about a real estate strategy that's near and dear to my heart: house hacking. This is how I personally got started in real estate, and it's a fantastic option for anyone who wants to live rent-free or close to it while building equity in a property. Imagine this. You're living in your own home, but instead of paying a hefty mortgage every month, you're collecting rent from roommates or tenants who are covering most, if not all, of your housing expenses. That's the beauty of house hacking. It's a win-win situation where you get to live for less while building a solid financial foundation. Section 2. The ins and outs of house hacking, turning your home into an asset. So, how does house hacking actually work? It's simpler than you might think. The basic idea is to purchase a multi-unit property, like a duplex, triplex, or even a larger house with a separate rental unit. You live in one unit and rent out the others. The rent you collect from your tenants helps offset your mortgage payments, property taxes, and other expenses. In some cases, you might even generate positive cash flow, meaning you're making money each month from your rental income. There are various loan programs available, such as FHA loans, that allow for lower down payments, making homeownership more accessible. Section 3. House hacking strategies. Finding the perfect setup for you. House hacking isn't one size fits all. There are various approaches you can take depending on your comfort level, budget, and desired level of privacy. One option is to rent out individual rooms in your house. This works well if you're comfortable sharing common areas with roommates and don't mind sacrificing some privacy. Platforms like Airbnb and Spare Room make it easy to find short-term or long-term tenants. Another strategy is to create a separate rental unit within your existing home. This could involve converting a basement, attic, or garage into a self-contained apartment. For those seeking more space and potential rental income, purchasing a duplex, triplex, or fourplex is a fantastic option. Section 4. Real-life house hacking heroes. Inspiration for your journey. Don't just take my word for it. Countless individuals have achieved financial freedom and built impressive real estate portfolios through house hacking. Their stories are inspiring and demonstrate that with a little creativity and determination, anything is possible. Take, for example, Paula Pant, founder of the Afford Anything blog. Paula famously house-hacked her way to financial independence by purchasing a duplex and living rent-free while renting out the other units. Another inspiring story is that of Brandon Turner, real estate investor and host of the Bigger Pockets podcast. Brandon started his real estate journey by house-hacking a fourplex, living in one unit and renting out the others. This experience laid the foundation for his successful career in real estate. These stories highlight the transformative power of house hacking. It's not just about saving money on rent, it's about building a solid financial future, gaining valuable experience, and achieving your dreams of financial freedom. Section 1. Taking the plunge, your first steps in real estate. Alright, future real estate moguls, it's time to take action. Jumping into the market might seem daunting, but every expert was once a beginner. Start small, learn as you go, and build up. First, define your goals. What do you want to achieve? Passive income, long-term appreciation, or both? A clear vision guides your decisions. Next, create a budget. Invest consistently and responsibly. Treat investments like a marathon, not a sprint. Building your real estate muscles. Starting small and growing big. Remember that $500 we talked about? That's your starting point. Don't underestimate the power of small beginnings. With platforms like Fundrise and Robinhood, you can start investing in REITs with as little as $10. It's like buying a cup of coffee, except you're building a real estate portfolio. As you gain experience, you can gradually increase your investment amount. Think of it like lifting weights. You wouldn't start with the heaviest weight on your first day at the gym, right? The same principle applies to real estate investing. Start small, master the basics, and gradually increase your exposure. Research is crucial. Before investing, do your due diligence. Look into the financials, track record, and management team. Read reviews and seek out independent analysis. Knowledge is power. Make informed decisions and watch your portfolio flourish. Section 3. The power of patience and persistence. Your real estate journey unfolds. Real estate investing is not a get-rich-quick scheme. It's a long-term game that requires patience and persistence. Stay the course and focus on your long-term goals. Think of it like planting a tree. You wouldn't expect to see fruit overnight. It takes time, care, and nurturing. The same principle applies to real estate investing. Be patient, nurture your investments, and you'll reap the rewards. Your $500 real estate empire awaits, so there you have it. We've debunked myths and explored strategies. Turn your $500 into a stepping stone towards financial freedom. Remember, Rome wasn't built in a day, neither are real estate empires. From REITs to fractional ownership and house hacking, these strategies are accessible. All you need is $500 and a willingness to learn. Section 2. Start building your future. brick by brick. Take that first step, explore your options, and start building your real estate portfolio, one brick at a time. The journey may have its twists and turns, but the rewards are well worth it. Imagine the satisfaction of watching your investments grow, knowing that you're building a brighter financial future for yourself and your loved ones. Remember, every real estate mogul you admire today started somewhere. They took that initial leap of faith, learned from their experiences, and persevered through challenges. Now it's your turn to join their ranks and create your own success story. So what are you waiting for? Your $500 real estate empire awaits. Embrace the possibilities, take action, and watch your financial dreams turn into a tangible reality. The world of real estate investing is waiting to welcome you with open arms. Are you ready to step in? Thank you for watching. If you enjoyed this video, please give it a thumbs up and leave a comment below. Don't forget to subscribe to our channel for more great content. Check out these videos for more inspiration. See you next time.